And more news coming in at this point in time. Indigo Delhi UK flight has returned. Airspace curbs forces Indigo flight to return. Mid-air U-turn by Delhi Manchester flight. A mid-air U-turn above the Ethiopian sky. These are details we have with us at this point in time. Remember, fly space has been disturbed for days together. Given the tensions and the increasing escalation of tensions in West Asia, now we have reports of an Indigo Delhi UK flight that has returned mid-air. This is a rather unprecedented situation wherein we see airspace curbs forcing a flight to return mid-air. We've heard of cancellations and we've also seen many disruptions in airspace travel. But right now we are seeing a mid-air U-turn by Delhi Manchester flight. Amit is getting in more on that story. Amit, what happened here? Because we've seen the delays and disruptions and cancellations, but a mid-air U-turn?
Well, this is particularly Indigo's 6E033 Boeing Dreamliner craft, which has left from Delhi's Eicher airport and was bound for Manchester. But what we are given to understand that because of the West Asia condition, the Middle East crisis, it was taking a longer route and it was inside Ethiopia's airspace in the Ethiopia, border, where the permission was airspace restriction. Due to airspace restriction, the craft had to make a U-turn. So it was, on the way to Manchester, but the craft, after taking a long route, by the way, being in the air for a longer time, they had to actually make a U-turn. And the aircraft entered India's airspace and has returned to Delhi. That's what we are given to understand. Indigo is saying that because of the airspace restriction, the craft had to make a U-turn and return to its base. Now they are in connection, in touch with the stakeholders, including Indian, aviation stakeholders as well as other international stakeholders who are concerned with this particular craft route, and possibly they will re-attempt the journey. But for now, what we can tell our viewers that this particular craft, a Boeing Dreamliner craft of Indigo Delhi Manchester, had to return from Ethiopia back to its base in India because of airspace restriction. Back to you.
Right, Amit Bhardwaj getting in those details and tracking that big story for us. A rather unprecedented situation where a Manchester-bound Indigo flight has made a U-turn, viewers, returning to Delhi. This was made near the Ethiopia border is what Amit is telling us. And more news coming in. Iran ballistic missile on Jerusalem skies. Missiles drop smaller bombs on Jerusalem. Iranian ballistic missiles are flying over the Jerusalem area and dropping smaller bomblets. Images on your screens right now are from the Jerusalem skies at this point in time. Experts have analyzed the video and similar footage from earlier in the war, confirming it seems to show cluster munitions, which sub-munitions released from an Iranian ballistic missile fitted with a cargo warhead. Israel has accused Iran of using cluster munitions during the latest war between the two countries. Israel itself has used cluster munitions in previous wars in Lebanon, is what experts have said. Other countries have also used these munitions, including Russia and Syria. Proponents of banning cluster bombs say they kill indiscriminately, endanger civilians long after their use. According to Associated Press, the US last used them in 2003 in Iraq, but continues to keep them in its arsenal and has not joined a convention banning their use. All right, now I'm going straight across to my colleague Sakshi Batra of Business Today Television, who joins us with the latest as far as the markets are concerned. Over to you, Sakshi.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon, you're watching the Business Today show with me, Sakshi Batra. This is the market closing edition where we get you all the closing action on the last trade. But first up, let's take a look at what's hot in the corporate and the financial world. Market slide as oil prices surge amidst the West Asia conflict. Sensex drops by 1,400 points, near 77,500. The Nifty is also down by 450 points to 24,000. All sectoral indices still into the red, barring some gains in the IT index. The Nifty now is down 10% from the January 5 highs that we've seen. It's already wiped out 43 lakh crore rupees in the market cap. Amid the escalating West Asia conflict, G7 finance ministers are set to discuss a coordinated oil release from emergency reserves through the International Energy Agency today, Financial Times has reported, citing sources. Oil marketing companies shares skid after LPG price hike amidst West Asia conflict. Domestic LPG cylinder price has been raised by 60 rupees and commercial by 115 rupees. IOC, BPCL and HPCL stocks trade lower as supply issues squeeze margins. Indian rupee has hit a record low against the US dollar. It's hit at 92.31 versus the 91.74 mark in the previous session. It's already down by 57 paisa in one day. Rising crude oil prices amidst the US-Israel-Iran conflict continue to weigh on the currency. Gold and silver prices also trade lower. We are seeing MCX gold prices slip by 1,500 rupees to now trade at 1.6 lakh rupees per 10 grams. Meanwhile, MCX silver has declined 4,500 rupees to now trade at 2.64 lakh rupees per kilo. Globally, gold prices have fallen by 2% as a stronger US dollar and rising energy costs are weighing on the bullion prices. First up, the big breaking news in front of you viewers. The high crude oil prices are unlikely to have a substantial impact on India's inflation at this point in time, as the CPI print is near the lower bound of the Reserve Bank of India's tolerance band. This is what Finance Minister Nirmala Sitharaman has said. India's retail inflation has averaged at 1.8% in the April to January period. Quoting Reserve Bank of India's monetary policy report, Nirmala Sitharaman has said that inflation could rise by 30 basis points if the crude oil prices are 10% higher than the baseline expectation and assuming full pass-through to domestic prices. However, the medium-term impact of global crude oil prices on price rise, on inflation also depends on several factors, including the exchange rate movements, the global demand and supply situation, the monetary policy transmission, as well as the state of general inflation and the extent of the indirect pass-through as well. This is what Nirmala Sitharaman has said in a response to the question in Lok Sabha. For more on this, I'm now joined by my colleague Chetan Bhutani. Chetan, give us an understanding. There seems to be some respite from the statements by Finance Minister that investors can draw that sharp surge in crude oil prices may not really impact inflation so much as was being anticipated.
Actually, absolutely. This statement could probably be quite a relief and a waiver for the industry, for the investors as well, who are keenly watching out the prices of global crude oil. In fact, the government, Lok Sabha in Lok Sabha, Finance Minister Nirmala Sitharaman has mentioned that India is at a considerably finer space, and of course, the first line of the question, in fact, answers all the queries when Nirmala Sitharaman mentions that in the past 1 year, the prices of the crude oil have been following in a very heavy trajectory. So that means India is very well prepared. It has its own reserves at a very reasonable discount, and in fact, if you have to tap the reserves, you will have to eventually take it out at a very reasonable price of between 69 per barrel to about $80 per barrel between Feb and end of March 2nd, 2026. The likelihood of 2026 CPI inflation, Sakshi, which stands at about 2.75%, closer to the lower bound range of RBI's 4 plus minus 2%. So clearly we are in a very reasonable spot. Plus, Nirmala Sitharaman also in her statement mentions about buffer stocks of food items, strategic interventions by the government, including subsidized Bharat brand retail sales, reduction in fuel taxes, of course, the big relief that was given, and of course, expansion of storage capacity and income tax relief is what the government has managed to give the consumers in the past 1 year, really cushioning these hikes as far as the Brent crude oil prices are concerned. But yes, the government is keenly watching out and would be in a comfortable position for now as well.
A comfortable position now, but of course will be a development that we will continue to keep an eye out on. Thanks a lot, Chetan, for getting us all those details. Finance Minister right now is not very concerned with the sharp spike in crude oil prices and believes the price hike that could come in because of this crude oil prices is minimal or marginal and may not impact that much as far as inflation is concerned. But let's welcome our guests on board now. We are now joined by Vineet Bullinshkar, the head of research at Ventura Securities, and to track the commodities for us, we have Mr. Kunal Shah, the head of commodity research at Nirmal Bang, also joining in. Welcome to both of you, and thank you so much for taking the time out for this conversation. Vineet, to you first. We have pulled up to the day's high point. We're back above the 24,000 mark as far as the Nifty is concerned. Even the Nifty Bank has recovered from the day's lowest point as well. What's your thought as far as the markets are concerned? How are you dealing with this extreme amount of volatility in the markets, and what should an investor, an average retail investor, do in these times?
So, we believe that, much of the panic that is there has been done. We have seen prices rally substantially in oil. And my view is that, we will see better times ahead. I think that the oil intensity of the Iran war has, kind of peaked out. And over the next few days, not even weeks, we will see positive news flow come through. And, I think buy the dip is a very, very interesting proposition at this moment.
Okay. Kunal, let me also bring you in for your first comment. I think the sharp fall in the markets today across the D Street was the key reason why the crude oil prices spiked above $100 a barrel. We saw for the first time these levels in the last 4 years, peaking at $116, $118 a barrel as well. What exactly is your thought on the crude oil prices? Where from here do we see the crude oil shock moving?
So today morning, what we saw was quite unprecedented. We've seen a 20% spike in oil prices in both WTI and Brent. And after that, we've seen G7 countries coming together and releasing their reserves. So they have been storing, all the G7 nations have been storing crude oil for the same reasons, that whenever there is this kind of unprecedented shock in supply because of any reason, geopolitical or any reason for that matter, so at that time, they tend to release. So 200 million barrel worth of crude oil is going to get released going forward during this week. And that is released and relieved the pressure that has come because of this ongoing war. So I believe that this is a short-term phenomenon. We still have to see how and when the Strait of Hormuz opens. And whatever supply, production cuts, what we have seen lately, whether those production cuts are materializing and whether that is going to be continued for going forward, whether this war is going to be a short-term or a broader-term phenomenon. So I think all those questions are something, which will determine. So I'm not able to forecast what is going to happen with the geopolitical scenario, whether this will be called off, whether US will come and say, okay, done, we are done, we've achieved our targets. If that happens, oil is definitely heading down sentimentally by another 10 to 15%, 85 to $80. But looking at the way the supply side has been disrupted, I'm not expecting oil again to go back to 60, 65 kind of levels in near term. So the oil prices are likely to remain elevated in near term, at least for next 1.5, 2 months.
Fair point.
Even
All
though
right,
it is the war is called
we
off.
have one more breaking news coming in, viewers, and this is with regards to the equity indices in Asia. They've recovered partially from the fall earlier in the day as well, and this is after the petroleum and natural gas company Saudi Aramco has now offered more than 4 million barrels of crude oil on the spot market through a rare series of tenders as well. Saudi Aramco is, remember, the world's biggest oil company, and following this announcement by Saudi Aramco, the oil prices are also moderated after a sharp increase we saw early this morning as well. So some respite coming in, Kunal. How do you read this? Saudi Aramco offering more than 4 million barrels of the crude oil. Is this just an interim support? Could this really lead to some ebbing lower of the crude oil prices now?
From where it is coming? Is it coming from the Hormuz, where most of the tankers are not willing to, or it is coming by? I saw one more route from where Saudi Arabia they can ship oil to. I just tell you the location. I make a note of it. So there is a place called port called Yanbu. So they can ship the oil to Yanbu, and from there it can be transported via Red Sea. Okay, so if that is the case, then it is a big relief for markets.
Okay, what is the current price you're reading on your system of crude oil right now, Brent and WTI?
Right now, as of now, when we are talking, WTI is trading at $98 and Brent is trading at $102. So
there's a sharp fall. Remember, viewers, Brent had gone up to 118. There's a sharp fall. You can see that happening now, and some relief coming in. It's already at $102 for Brent crude. WTI has slipped below the $100. Just in a single day, this wild swing has taken place. So keep an eye. Kunal, I'll come back to you. But Vineet, coming to you as well. The markets are recovering slowly and gradually as well. How are you looking at what, in fact, to buy in these prices? Will you take the benefit as an investor of these low levels into the markets? We're back above 24,000. Was this a swing trade that offers a good opportunity?
What I believe is that over the next 10 days, I think the extreme fierce psychosis will go away. And this is the point in which you should, over the next 7-8 days, gradually add to your positions in the markets. So very good levels to enter the markets. Yeah. And so I think Reliance is one of the biggest beneficiaries of the crude. Second thing is, they are the only ones who will be benefiting significantly from Venezuelan crude supplies. So I think Reliance is going well. We also think that ONGC and the entire, refining pack will do very well because, the refining capacity globally has been significantly stigmatized. And I think that, we will have very high refining rates going ahead. So I think that entire pack, the oil block as such, is a very good investment from current levels.
Okay, got that. Kunal, coming to you, do you see a scenario where we can positively say that the peak that we have seen for crude oil prices today is in fact the peak of this war impact that we would see? Because it's already climbed down now to 100 and probably below $100 a barrel. Do you see 118 as what has topped already?
It's very difficult to say because for a short term, 118 is picked out because of so much oil have been coming out of the reserve supplies because all these oil which is flowing from Saudi Arabia, Kuwait, Bahrain, Qatar, this oil is not going via Hormuz and it's not reaching to US, Europe, Japan. So they are releasing their reserves and that's why oil prices have gone down. So now we have to see what is happening with the real crisis. The prime reason, now Iran has come to know that we can control oil prices by controlling the Hormuz, and hence what Mr. Trump is going to say tonight. He came up with a statement that he's going to make some important announcement. Yeah. And I keep my fingers crossed that it is a positive one.
Yeah. Absolutely. Vineet, apart from Reliance Industries and the oil and gas scenarios, what else are you picking up as an opportunity to bottom fish in this point in time?
I think FMCG is a good sector to invest in. We like Nestle. I think Nestle will do very well. So these are some of the stocks that we are looking to buy into them.
What about sugar, Vineet? Do you think sugar spike? There are sugar stocks that have been rising in the trade today. How are you looking at that?
No, so they are a natural corollary to the oil price effect that we have seen. And here, Balrampur Chini, your Renuka sugar and Awadh sugar are top picks in the sugar stocks.
Okay, FMCG sugar stocks, there are some opportunities that you can definitely scout at this point in time. Kunal, coming to you, the impact that we are seeing on commodities and bullion prices like gold and silver, how are you reading into the signals right now? Usually, whenever there is an escalation into the war, it's the gold and silver prices that tend to move up higher. This time around, over the weekend, escalation has in fact led to some kind of a cool off in gold and silver prices. What is the reason behind it? What are you seeing as the prices outlook for both gold and silver?
I think it's very a mixed scenario because the way oil prices are moving up, this is stoking fear of hyperinflation or perhaps high inflation. So now if oil prices are continuously hovering above $100 and it is continuously going up, at that point of time, there is a scenario that the central bankers will be no longer to cut their interest rate. Perhaps they may have to hike the interest rate, and in that scenario, people are going to buy their dollars. So everyone was sitting in a trade where they were short on dollar and long commodities. So now what has happened is, because of this narrative which is played of geopolitical tension between Iran and Israel-US, so what has happened is everyone who was short on dollar, they started going long on dollar, and they have been buying commodities, so they have to unwind the commodity. So entire carry trade of short
really expect as far as the crude oil prices are concerned beyond that meeting? Now, Aishwarya, we do know that the countries are pretty concerned with the current situation of the war, and everybody needs to protect their energy reserves. In the morning when we were talking to you, you talked about India having about 50 days of a reserve right now. With this development coming in, that G7 nations will be meeting to release strategic reserves. What are you expecting there?
Well, more on what the G7 countries will be discussing is expected later this evening. But what's more important is that around 4:30 p.m. we are expecting Oil Minister Hardeep Singh Puri to address the crude crisis in a way in the Parliament. He will be talking and discussing about LPG, LNG supplies for India. He will also be talking about crude reaching the $120, close to or nearly that, reaching that mark. What would be the contingency plan as far as our oil marketing companies like IOCL, BPCL, HPCL is concerned? That will be addressed, of course. And in the Parliament, opposition's allegations will all be cleared as to what the Indian government is doing or is expected to do in the next couple of days if crude does go to breach that $120 per barrel kind of level. So that's expected around 4:30 p.m. We will keep you posted on what goes through. We will also be interacting with the minister just a couple of moments from now.
Absolutely. We look forward to that, Aishwarya, and you getting an exclusive there as far as Hardeep Singh Puri is concerned, and the update as far as LPG and the crude oil situation is concerned. Going back to Mr. Bulinchkar now, Vineet, give us an understanding of how are you looking at the scenarios when it comes to LPG. We are given to understand PG Electroplast as a stock has been hammered. 15% of a fall occurred. This was after the company informed exchanges that it has received a communication from its gas suppliers about shortage of gas gas under the gas sales and purchase agreement as well. So it's not just limited to the gas stocks, but even those companies that, draw a lot of gas for their input. So how are you looking at the gas scenario there? You did talk briefly about GAIL and other stocks, but what about PG Electroplast kind of stocks?
So yeah, obviously, if you choke off supply, then how your revenues get hit directly, and it massively impacts your margins.
Yeah.
So I think these stocks are going to face a little bit of music, and gas is going to be a little difficult commodity to trade. Oil is relatively easier to transport. So
Correct.
just be wary on these kind of gas-related economy and stay more focused on the liquid stocks in oil.
All right. Kunal, coming to you, we've discussed a lot about crude oil and the bullion as well. What about the currency? How are you looking at the price fall there and the rupee at record low levels at 92.2, 92.3 odd levels against the dollar? What do you expect there now?
With oil going down, if oil goes down, then I think 93 should be the level below which rupee should not go down, and I believe that it should be able to hold those levels. And RBI is aggressively, supporting and in the market right now. So I'm not expecting, a big disruption in terms of rupee sharp depreciation from here, provided oil stabilizes. So it is all it all boils to where the oil is heading.
Absolutely. Vineet, the first reaction as a positive that we are getting after the rupee fall is on the IT stocks. Now, IT, we all know, is a sector which is based on outsourcing, and therefore, whenever the rupee falls, there is some kind of a benefit that the IT sector as a whole tends to benefit from. The index is up at the day's high, slightly into the green as well. What's your stance on the IT stocks?
We continue to remain extremely pessimistic on IT stocks. I think the larger picture that is going to emanate is going to come from sell-off. I think if you see the kind of chip availability that is getting hit because of in Taiwan, I think that is going to lead to a cascading effect on the entire value chain of AI and other related sectors. So my trade out there is to exit or stay away from these stocks completely, because we are not of the woods, and you're going to see realism kick in terms of valuation of all this entire tech sector.
Okay, so the tech sector could be in for some more pain. So exit this space completely or stay away is the kind of viewpoint that Vineet has shared here. But Vineet, a lot of retail investors, we have seen in the recent part a lot of opportunities by way of crisis that has emerged as, in the hindsight, probably the best time to buy into the markets. We've seen that happen with COVID 2020. We've seen that happen with other crises as well. And we've seen how the markets have had opportunity to bounce back, probably give the biggest wealth creating opportunity to investors. Does this current war provide that kind of an opportunity to retail investors, Vineet?
I think barring for tech, I am definitely seeing good opportunities come in. But my view is that tech is fundamentally undergoing a rapid shift, and it's going to be a while. If the consensus trade is to buy IT, I am completely against the consensus, and I think that there's a lot of pain out there, and hence
overall in the markets, I'm asking
I think you have to buy value stocks. We've spoken about sugar, we've spoken about oil. I think FMCG is the next bet that we should be looking at.
FMCG is the next bet that you should be looking at. The markets have shut shop, viewers. We managed to close above 24,000 at this point in time, even though we've slipped by 444 points on the Nifty right now. Barring the IT, all the sectors have closed into the red, but there has been a cool off from the high levels on the India VIX. It's up by about 17 odd percent. It ends about 23 odd levels, but still it's cooled off from the spike that we had seen during the course of the session. But autos have dragged by over 4% as far as the top losing index sectorally that we've seen today. When we look at the PSU banks, they have followed right next, about 3.7% of a loss right after autos. We are seeing the banks continue to be under pressure. So the Nifty bank, the private banks, the PSU banks, all three of them are showing us some declines. Metals, oil and gas from the commodity basket have also seen pressure in today's trading session. The broader markets, both the mid and the small caps as well, have fallen to the tune of almost 2% in trade. So that's where the index is. But let's look at the IT index. It's ended mildly positive. That's the only sector that has emerged as bucking the trend towards the end of the session today, 0.08% higher. Top moving stocks are Wipro, Reliance, Apollo Hospitals on the Nifty today, whereas the top drags continued to be impacted by the oil stocks. So we had Tata Motors down, Maruti, Eicher, a lot of these auto-related now names that continued to drag in trade as well. But remember, viewers, we also have to focus on how India has now secured the best trade deal with the United States among competing nations, as what Commerce Minister Piyush Goyal has said at the Raisina dialogue. He's also noted that the US-India relationship remains strong and multi-dimensional, going beyond trade into technology, defense, investment partnerships. He's also added by saying that the first tranche of the bilateral trade deal has been finalized, with negotiations for a broader agreement expected to continue. Let's listen into what he had to say.
Ultimately, a trade deal is about preference over your competition.
Correct.
End of the day, what's a trade deal? You are trying to get a preference or a preferential access for yourself, your goods, your services, compared to your competitor. And we got the best deal amongst all the competing nations with whom we compete.
Correct.
I mean, whether it's in our neighborhood, Pakistan, Bangladesh, if you look at the ASEAN region, we got the best deal amongst all of the competitors with whom we have to compete. So I think the US-India relationship is strong. It's multi-dimensional. It's not only about trade. There's a huge technology overlay on it. There's a huge critical minerals partnership. There's a defense partnership. So for us, there's a huge amount of investments that flows into India from the United States.
All right, time to take some of our viewer queries. Vineet is with us. Vineet, we have one question coming in from Lucknow, from Pratik for you. And he asks you, should I buy crude sensitive stocks right now? You did say that Reliance is something that you are looking at this point in time. Crude sensitive stocks, do you think, you'd be able to advise him on that?
As we said, Reliance is a crude sensitive stock. ONGC is a crude sensitive stock. Indian Oil is a crude sensitive stock. So I think these are some stocks that you can look at to buy into it.
Okay, we have one more. All right.
Which we spoke about also. Yeah.
Okay, we have one more query then. This is Sunil Rawat from Dehradun. He wants to know from you, is investing in SIPs risky amidst the global turmoil at this point in time? So a lot of viewers we have seen in the last couple of years have picked up their investments via mutual funds. They have a lot of SIP related strategies going. What would you advise?
You have to continue your SIPs because you are accumulating more units at lower prices. And when the markets go up, the best time to buy is in deep stress like these. So adding SIPs in these worst of times is the best time to buy units. So the dollar cost averaging works in your favor, and hence I would suggest that you continue investing and be invested for the long term.
Be invested for the long term. These crises are in fact giving you opportunities to double down your investments and probably get more units for the same investment. Thank you so much, Vineet, for being with us on the show and of course guiding us through a lot of movable parts in the markets that we've been tracking. With that, viewers, it's a wrap on the Business Today show. In case you too have any questions about your investments in your mutual funds, SIPs, stocks or gold related queries, send them to us on the number that's flashing on your screens. With that, it's a wrap. Don't forget to tune in tomorrow morning at 9 a.m. to track all the market opening action tomorrow.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.